So today I'm going to talk to you about the sweet spot of a trend. So if you are a trend trader or know what trend trading is basically following the market. So if the market's going up, you follow with the market and just jump on board. If the market's going down, you'll actually follow that trend and just kind of like start selling the market. And that's basically trend trading in general. Now the topic comes, what is the sweet spot of a trend? So you could buy, get into the market anywhere. So let me just kind of overlay and show you what is, a typical trend looks like. So it'll kind of start here, and assume this is candlesticks. If candlesticks is your way to trade, but just I'm kind of like zooming out of it, so it's just showing up as a line. But bear with me as we kind of like draw through this. So the market's kind of like heading up. It's kind of like going up here. It peaks and then it kind of like starts declining, and so this could be a typical market in terms of where you as a trend follower would get into the market. So there's a lot of debates on, I need to find the actual absolute minimum. So this is where the minimum, like I need to get in at the base. So I could ride this all the way to the top, and this is the peak, and I need to kind of like get all the profits from there and then short sell and get it down to the bottom. So the sweet spot of a trend, and this is kind of like the home base. This is like ground zero over here. So this is ground zero, and this is like ground, like the first base. So this is ground zero, this is base one. This could be base two. This will be 3. Get it here. And this will be 4. And so if I was to continue drawing this, it would kind of like stabilize. This would kind of like stabilize back again and meet this again at this level. So that's where it's going to end. So I'm just going to show this as 4. So the sweet spot, back to the question, what is the sweet spot in trend trading? So the sweet spot in trend trading is not at zero. And the reason being that you don't really know, is it actually going to go up here or is it actually going to fall down here? And it's just a flat range bound market. It could remain in this state for months to come and you would still be stuck. And this is, I'm looking at this from a weekly time frame perspective. I recommend weekly for any of you trading. Don't look into the daily and try to find the sweet spot. Though you can, the weekly will give you a more clear picture of like where the market's headed. So 1 is an absolute no. 0 is an absolute no. 1 is a possibility of like stepping into the trade. You're kind of like knowing that okay, the trend's moving up. So the sweet spot to me would be getting it at the first ride up. So whatever the first ride up is into the trend. So where the trend, this is the base that's been formed here, wherever it's riding up. So 1, if 1 would define as the ride up for you, it's just a ramp up in the trade where you can see this is like the angle of attack, and if it's 45 degrees, yeah, this is where you would possibly consider your sweet spot. Or you could consider the number 2 as your sweet spot too. So anywhere between your to your is going to be a sweet spot. Now you'd be questioning me and saying, why not 3? 3 is also a really good indicator. Now if you are in the trend, you've already captured. So say for example, you placed your buy at this level. Okay, so if you place your buy at this level, you can ride this up all the way until your, as soon as you see it selling, maybe this is where you could possibly sell. Like when okay, it's not going to go up further. Buying at your is an absolute no. And the reason being that yes, I'm risking so much, but I'm also risking that the market may just kind of turn down your, you don't know, this is real time, right? So buying at your, this is a good buy. The first ride up is also good. Like, although risky, like, the second write up that you see here, the number 2 is risky, but it's also, you could possibly get in over here, like presuming that this is going to actually write up further there, but never get in over here, because you never know, like, when is it going to turn, and it'll kind of cause you to lose a lot of money from that perspective as well. So to summarize, weekly time frames is what I recommend. Never get it at this level, at 0. If you can, try to get it at this. The sweet spot would be either your or all the way up to your, but never above it. And the important thing to keep in mind is, so say for the example, like if the market's heading up slowly, it's okay to get it in this. This is all checks. As soon as the market peaks up like that and it's like a rocket, that's a no. And the reason being that the market will start declining and coming back here, and then again it may possibly try to go up again. So you got the concept is, never try it at these small like turns. Wait for a good solid rally and then actually get into the market. But don't wait for like it to kind of, the angle should be like, something small. If it's too steep, it will come down as steeply as well. So, assume this is candlesticks and it's doing this to you. So keep that in mind, and avoid trading these high peaks, because they are lethal. They can destroy you even if it's on an intraday basis. These peaks, if you ever study charts, you will notice that pre-market it'll be 0, like, suddenly spike up and then it'll like spike down again. And what this does to you is that you would probably be ready to buy it at this level, thinking like, okay, it's going to spike up further. It may at sometimes do it, but when it falls down, you basically are selling it at, a huge loss, depending on how leveraged are you into it. So I hope this is helpful. To recap with, buy it at the sweet spots and avoid buying it in the number 3, which is like the overbought territory in terms of like trading styles and strategies. So with that, I'll see you in another video, and happy trading.